All right, everybody. Stocks by the numbers. Welcome back. We're doing a quick update on AST SpaceMobile, ticker symbol ASTS. Yes, yes, yes. Stock right now 26.79 on the close, down a little over a point today. Ended up closing down about 4%, but I'm sure you guys see that the stock dipped down to almost about 23 and a half. So you opened up right around this price, then you dropped big here down to this trend line, and the stock ended up roaring back. I mean, I want to say roaring back because technically it was like a 10-15% swing from the bottoms to close up here back in almost 27. So it looks like after this big run up recently, the third week of August, looks like we topped out at around 39. The stock got up to 39.08. Now it looks like, in my opinion, kind of looks like we're trumpeting down, even though there is tighter consolidation down here. So we had our one breakout day. So if you want, you can zoom in as well, and you could say what is this, 39.08. So you can like cut across like this, see, to these tops. um Actually go a little bit lower. I would go to the top kind of body of that candle, right, like right around there. And as you see, that's where you had rejections and some dancing around here yesterday. And then, of course, you see the run up here later in the afternoon, almost coming back to that trend line. So technically, in my opinion, we are in a trumpet because you have to play kind of all breakouts as well. But also, even on other stocks, like when people do tech analysis on like Fubo, right, when we were looking at that long-term descending wedge, a lot of people have their trend lines differently. Some people, I like to do both. We connect to the absolute tips and tops of these wicks on these candles. Some people cut down across. They look for the actual bodies of the candles, right, at the open or at the close, and they use those. Even here on the bottom, you can see, right, drawing this trend line across. This is from the bottom of August 20th, 24, cutting down, and you'll see it meets up with these two bottoms here on Tuesday and today. But here, it doesn't look like it makes much sense. But at the same time, if you zoom in, you'll see that the trend line goes right here at the close of this candle around 28.63, which almost meets up with that body of the candle. And then if you look at the future candles here to come out throughout the rest of the day, you can see that the body almost stopped right there. Let me zoom in a little bit. You can see the body almost stopped right there. Right? You had your little halfway candle, and you can see it stops right there at the trend line. Then it stops right there at the trend line. You have a rejection off the trend line, goes back above and below the trend line, dances around it, bounces off the trend line, almost makes a bull hammer, but then rejects and dances back off, right? So sometimes it's not precisely perfect. And of course, more importantly, looking at different time frames changes your trend lines occasionally. So, what might look messy here on the 30-minute might be lined up on the 5-minute, or what doesn't make sense on the 5-minute it looks, you see a different pattern on the 1 year. And that's why anytime you're doing tech analysis, in my opinion, even if you're doing a quick scalp trade or whatever, if you're going to play, QQQ on the NASDAQ, you have to look at the trends today. You have to look at how it looks over the last 5 days. That's why we have these different time frames down here, right? You look at a 5-year chart, see if you see a different pattern. Pull up a 3-month chart, see how the longer time frame looks. Is it setting up something else? Are you seeing a descending wedge in the immediate short term where you might have a pop out? But also, is it is it inside of like a longer descending channel? Like something like this, right? To where you're expecting a breakout here on the daily or on the weekly, but looking at the monthly or the bi-yearly, you're seeing continued downtrend, right? So, and that's why we talk about looking at short-term tech analysis and long-term tech analysis and kind of finding that perfect storm where you have kind of two things setting up in the short and long term. Maybe the RSI pulls back to like 32 or something, right? So all of these things are kind of lining up, gearing up for a big pop out. And that's when obviously you step in. But this is why you have to look at a lot of things. But anyway, going completely off on a tangent, ASTS, good news for you guys. And we were waiting for this satellite launch to actually happen, right? So we had to wait for the company to finish. Then we had to wait for the company to deliver them. Then we had to set up a launch date. Then we had to launch, right? So you needed all those things to go swimmingly in order for the stock not to really drop back down and, pull back to like 15 or 12 or something and give back a lot of those gains. So you guys, successful launch here. So congratulations to all you AST SpaceMobile shareholders. And unfortunately, I think, in my opinion, it's very hard to tell what's going on with the stock because, on one hand, I understand you're all very hype. They're saying that, the connectivity is better directly to the cell phones, and, it's going to potentially change the game, and everyone's going to want a piece of it. Okay, fine, fantastic. So looking in the longer term like that, you can say we don't know how much value is here, but it's probably going to stay up. But on the same side, you can make the argument, which is, again, what I was originally saying, although I didn't expect this much of a squeeze, to be honest. But again, basically saying we still needed to wait for the satellites to actually get delivered and have a successful launch. And more importantly, now you have to wait for, the actual contracts to come in. And that's why, looking at a valuation standpoint, you can definitely make the argument that we're overvalued, because in the moment, not much is happening on the business side, and we're still kind of maintaining a 7 billion market cap. So again, I know you guys get upset when people don't say, oh, it's at 26, it's going to 50. I understand, but also at the same time, you kind of have to understand what I'm saying as well. We can pull this market cap down to like 5 billion, right? And that would kind of be fair. Because people forget we went from about 2.5 up to almost 40. So most stocks don't rally, 2,000% inside of 7 weeks or whatever it was. But again, not trying to rain on your parade. I know there's still a lot of hype behind this stock, but this was a key trend line that I'm looking at here. And again, this is all the way down here at like 1380. And I'm just curious, again, because overall we are in this trumpet, and I'm just curious how much of these gains are given back. And you see how we ran up to almost this level here where we hit, and then we rejected and pulled back, excuse me, and then it bounced off the 20-day and ran up basically to this level, and then looked like it almost formed a head and shoulders here, but ended up popping up on after earnings here with the updated timeline. But you can see it looks like right around here, we could say. So what's that, like 2170, maybe like $22, right? And see, that's right where it started before it really took off. So in my opinion, that's a key zone here. So even though this trumpet, this downward channel, might upset you because you're not just constantly seeing up and up, like of course everyone wants to see. But we might stay downward in this little channel going out to, what is this? We're talking even just 2 weeks. So this is like 2 weeks for today. So what might seem like in the immediate short term, oh, the stock is cooling. Is the hype over? Should I potentially sell? This is why we have to look at key levels, right? And the downward consolidation channel here isn't a bad thing. Because if I told you, right, if I had a crystal ball and I said, oh yeah, 6 months from now, the chart's going to look like this, where it's going to come down to 20, 22, and then it's going to bounce and break back up into the high 30s, potentially 40 plus, right? If I had that crystal ball, then looking at it, you would say that, oh yeah, that makes sense. Especially when you look at past performance of other long-term growing stocks, right? This is what we do. We have big run-ups, we pull back, we consolidate, we quiet down for a little bit, and then boom, we get another announcement, a nice earnings beat, and then we bounce and we run up, and then we calm down, we consolidate, boom, and then we break up and we bounce, we take the next leg higher, right? So this is why stocks just can't go up and up. So going from 2 to 39, that's why I'm saying, even if you cut that gain in half, you're looking at like 19, $20, right? So running it all the way up, giving back half the gains, and then having it bounce and go back up to where it was may be what happens, in my opinion, with this ASTS. But of course, again, if we're going to continue to launch more satellites, and, hopefully for you all, they're successful, then chances are, yeah, you're going to hear these consistent positive catalysts of, whatever, T-Mobile may start investing into the company, or again, someone else is going to sign up and start using their satellites for their coverage now just because it's better, it's more efficient, right? These are the types of catalysts that may potentially start rolling in. So that's why, from a fundamental standpoint, I understand that people could say, well, it's massively overvalued, stock should pull back to like 10. I understand that argument, but also at the same time, if it truly is going to be potentially game changing, and even if they don't start making whatever 50 billion a year in revenue overnight, The important thing is it's going to feed itself and fuel off of the momentum of the positive catalysts coming in. And even if it's overvalued, the main objective to take from this is that there is value over the longer term, right? So that's why, in my opinion, unless markets really do begin to chunk down and sell off, coming all the way back down here to like this, again, like this other top, looking like, yeah, like 13 and 3/4, around 14, coming down to this trend line here. Like it would take, I think it would take big market sell-offs for that to happen, in my opinion. But I think this key level right here, like the 2021 level, that's your key level to watch here. Because again, even if we channel down, in my opinion, that's not necessarily a bad thing. But what you want to see is you want to see the breakup and the bounce off of that level. If we begin to break below that level and all of a sudden we're at, yeah, like 1890, 1780, then they may again be breaking that support and bringing it all the way down here to this trend line. And you might see 14 and a half, $15, and then it bounces back up. So again, that's just my opinion. I just like to lay out some potential scenarios for you guys so that if it does happen, you're not sitting there like, how did that happen? I don't understand that at all, right? And I understand I may have a little more experience than some of you, but also at the end of the day, having someone just lay out some scenarios, again, just prepares you a little bit, right? So that's why I wanted to look at some of those key levels. But ASTS, again, 7 billion market cap. Fundamentally, I mean, the stock could remain quiet and potentially just flatten out for a while, like I said, until a contract comes in. But chances are, even if it does channel down, again, when the next satellite launches, that's probably going to pop the stock up a little bit. And for those of you who are saying, yeah, but they launched the satellite, today or this morning, and, it was successful, but the stock is down. So how's that make sense? Again, we went on a massive run with this stock. And that's why I say sometimes these little consolidations, these little sell-offs, it's not necessarily a bad thing. ASTS launched Bluebird satellites 4:52 a.m. There you go, Cape Canaveral. Designed to reach smartphones. Yes, we know this. Satellites offer non-continuous, in select markets. Will target approximately 100% nationwide coverage from space with over 5,600 coverage cells in the U.S. Quote, this is an exciting next step to a future where our customers will only be hard to reach if they choose to be, giving them the power to go anywhere and the possibility to do anything while staying connected with just an everyday cell phone. And that was from AT&T. Of course, they made the investment in ASTS, so of course, they're pumped about it. ASTS stock fell. Company filed a prospectus for the offer and sale of up to $400 million. Of course, in my opinion, I would do that as well. Again, we just looked at the stock running almost 2,000%. So yeah, of course, in their mind, that's free money for them. Shares are up more than 25% the past month. How to buy the stock. We know how to do that. Shares dropped despite successful launch. Fell after the company said the launch of its first 5 commercial satellites was successful. So again, what we might be seeing also is the stock may stay in that downtrend and continue to consolidate until investors see that all 5 were successful, right? So that might be what we're waiting for as well. All right, you had to take all these steps, to get these 5 delivered so we can launch. The first one's up and running. Okay, fantastic. You got 4 more to go. And as long as we don't run into any issues, what that's also going to kind of solidify for investors is that we have also a stable service as well, right? So if the orders and the contracts do start to really snowball in for ASTS and the revenue really starts chunking up, then what investors are most likely going to see is if we hypothetically have to develop and deliver and launch future satellites, there should be no problem. And off of that potential news, again, probably, a couple of years down the road, speculating, of course, but off of that potential news, you're going to have another big bump up in stock value, as opposed to potentially dropping, right? Like hypothetically, if let's say 3 out of 5 of these satellites, the launches are successful, 2 of them have issues. Then what's going to happen is hypothetically, if we go down the same scenario, 3 years, 5 years from now, if they deliver 2 more satellites to launch, then what's going to happen is you're going to have a mixed result, right? Because people are going to look at the past performance and the results of previous launches, and they might say, well, they're delivering, 2 or 3. That means at least one, is probably going to be bad. So, we might not see much movement on the stuff. You understand what I'm saying? So these 5 launches right now, in my opinion, are going to showcase more stability in the actual service. That's the way I'm personally looking at it. So again, if I was an investor, could make the argument that the stock could go higher, could make the argument the stock could go lower. But after going on big run-ups, as I say, the quieting down period, kind of that quote-unquote, kind of coming back down to earth a little bit situation, it's not necessarily a bad thing. Midland, Texas company, yes, we know this. Lifted off Cape Canaveral, delivered the 5 largest ever communications array. Satellites are expected to offer non-continuous cellular, yep, with beams designed to support up to 40 megahertz of capacity. Okay. We're moving. Wait, it said it launched the first 5 of its satellite. Wait, so they launched 1 or they launched 5? See, now I'm confused. But I mean, either way, we know that everyone was waiting for the launch to see if there were going to be any issues, and apparently no issues. Yeah, first 5. Yeah, my apologies. I was reading that incorrectly. I thought it was the first one of the 5. My apologies. My apologies. So that entire hypothetical scenario that I just laid out for you guys for like 5 minutes, disregard that. After launch, Bluebird satellites are planned to offer. Yep, okay. We're consistently getting that. So yeah, that's pretty much it. Obviously, the launch was successful, and I wanted to update again just on some potential patterns I'm seeing here in the stock, and some key levels the stock could potentially pull back to. But right now, in my opinion, looks like between like that $21, $22 level. And you have to see again if it breaks down, and then do we start dropping into the teens, or is the stock going to have a bounce there, and we're going to start running back up 25, 27, right? Kind of slowly getting back to where we were. Because technically, again, the RSI was overextended on multiple occasions, but we did consistently kind of keep getting updated news, right? And every time a piece of news hit on ASTS, you had an analyst come out and say, oh, now I'm up in my price target. Oh, now I'm putting a buy on the stock, right? So this is what we talk about, like the NVIDIA situation. It's just that consistent snowball effect of just nonstop positive catalysts. And the stock really, really took off here. Again, this started mid-May. And also, I think we originally looked at this stock. Actually, I don't know now. It's not coming up because I made so many updates. But I think we looked at the stock like October of last year. And originally looking at it, I think I said, like looking at their timeline, I might have said, like, in my opinion, I would buy like a couple of months before that happened or whatever. And I think we said it would be like April or May potentially. And that's another thing I wanted to mention in the video here. Just a slight piece of advice, because again, I know some people jumped on me. It was here when they reported earnings, and then of course they got the news of the investments from AT&T and Verizon, right? That's what really kicked off the run here. And it's funny because I know, like, in that moment, in the shorter term window of just looking at the stock, multiple times, I said, in my opinion, right now, I don't personally see any urgency. And then obviously we saw a different scenario. However, if you go back, I think, to the original video, again, back like last October, when I first just looked at the stock and looked at their timeline, I may have said originally, oh, I'd be a buyer, in April or, the end of April or whatever I might have said, right? We have to go back and double check that. But the point is, that's why they say, like, over analysis by paralysis, right? That's basically a perfect example. Because when I initially looked at the stock a year ago, I predicted like a decent window to start building a position and accumulating shares. And of course, it's all hindsight, but the initial analysis turned out to be correct. But then in the shorter term, looking at it, right, all I was basically looking at the time was the fact that, they didn't deliver the satellites yet. They didn't finish them yet at this point, and they were reporting earnings. So because there's no business, chances are earnings are going to be light. So that's why I said, in my opinion, in the moment, there wasn't any urgency to buy ASTS, right, until we heard something. And then what happened? As earnings came out and we knew they were going to be light, they also came out with news about the telecoms now making investments. So again, sometimes the main moral of the story is sometimes your first initial glance, your first initial gut feeling, your first initial breakdown of a stock, of a business, sometimes is the correct one. And to, constantly go back and like update yourself and try to like time it perfectly, sometimes that makes it that much harder. So, just a little slight lesson there, but I don't know. It happens, right? It happens. But I do want to go back and check that video, though. I don't want to do it now for you because I'm talking for too long already, probably. But we'll find it. So we had the big run up here, and you can see literally dropping down, consolidating, had that nice bounce off the mid-Bollinger Band, then it rejected off the mid-Bollinger Band, channels down, 2363, bottom daily Bollinger Band. Stock hits 2354 and then bounces nicely again to close down slightly less than 4%. So now, coming off the bounce off the bottom Bollinger Band, we may see a run up back to the mid-Bollinger Band here of about 3068. Or, what did I say before? Like that 21-ish level might be a key level to watch. So here also you can see the 50-day moving average has now climbed up over the last few months, and it's sitting just a few cents below $22. So this is what I mean. We could potentially bring it down to this key zone before we took that next leg higher, which also happens to coincide with our 50-day moving average. So we can potentially keep channeling down, test that, and then have the bounce back to 30 plus. You understand? So this is why, unfortunately, you can kind of make the argument for either direction here from this, 26 and change level. RSI now, it was heavily overextended, right? But people basically, it seemed like people were just jumping in on any dip they could, right? RSI comes back down into the 60s. It's no longer overbought. Stock was down, whatever, 3-4% today. Boom, I'm going to step in. I'm going to buy that dip, right? So the RSI was held up pretty well, and you can see now this 50 RSI goes all the way back to the initial pop here that took place around the middle of May. So again, this is why I'm saying, looking at the RSI chart as well, you can potentially now have a bounce off the 50 and run back up here to where we were, or you're going to have the potential break and they can bring the RSI all the way back down to 33 or whatever before they decide to bounce it. That's why I was showing you that you could potentially start to see the low 20s there on a continued pullback, but not necessarily a bad thing, right? And again, if you told yourself, oh, it doesn't matter what happens now, I'm holding the stock for the next 5 years, well then, hey, listen, this is just a quick update for you, and it's not necessarily, I'm not here to try to sway you, to buy more or sell the stock. That's not why I'm here. I just like to look at the stock, show you guys a couple of things that I'm seeing, and then, like we always say, whatever you do with this information is entirely your own prerogative. But the RSI here on the weekly time frame, you can see we pulled back. We almost got to that 70 benchmark, but then we bounced and the RSI popped up even higher a little bit to above 73 now. So, again, I feel like we can make two arguments. One, on the longer, on the longer time frame, RSI overextended, we got to pull this back to like 50, right? Which of course means the stock will sell off and probably hit those high teens. Or also, at the same time, if we were running up to, over 90 and then we almost pulled back to that 70 benchmark to make it more attractive, but that was enough of a dip and investors started to, start pile in again, then we may have a bounce off the 70 and now the RSI may run back up to like 80, 85 and then cool down and start to pull back. Right? So unfortunately, this is why, again, you could kind of make the argument for either one. You have the big spike up and now you're consolidating down, right? So people want to know, oh, is it flagging? What's the actual pattern? Are we going to pop up now back to mid-Bollinger Band? We said 3068. Top Bollinger Band on the weekly, 3421. So you have that potential to pop up. Also, at the same time, it does look like you have the potential to pull back to that moving average, that key level there of about 2021. Test that. And then if we happen to break here, if everyone's looking at the longer term RSI, kind of coming to the consensus agreement that, hey, listen, we got to, sell this off and calm it down a little bit, then you can have the break on the RSI, which could potentially bring it down to 18, 17, 16, and again, this is the weekly chart. So if that happens over the next couple of weeks, then the mid Bollinger Band is slowly going to keep climbing up as well, and that's going to get, a point and a half higher. So now your mid Bollinger Band is going to be 16 and a half, 17 and a half. So a pullback even to the mid Bollinger Band isn't necessarily going to be taking away a lot of the bulk of the initial gains that the stock made, right? So again, anything can happen, but with these companies that you believe in over the longer term, and they go on these big runs, and then they calm down, they consolidate, and even look at something like SoFi, right? As much as I like SoFi, and other people did as well, what happened? The stock was in a descending wedge for 6 months, 8 months, or whatever it was when we looked at it. Stock was hitting new 52-week lows, right? And I'm sure a lot of investors are like, what the heck is going on? And then all of a sudden, boom! And it pops out, it breaks out of the wedge. I think they, reported earnings. I think they beat earnings. Stock ran back up to like 8 and change or something like that. That's how it happens. That's how it happens. So that's why when people ask me, oh, what's going on with this stock? It's just been kind of like trending and channeling downward for like the last 30 days. It's like, brothers and sisters, trust me when I tell you, it's not necessarily a bad thing. They have to do this from time to time. But let's check the pivot points actually real quick. I'll let you go. Pivot points here on the weekly, obviously we're well above these pivot points. What was this one back here? It's about 31.90, 31. Yeah, like right there, 31.96. Okay, so we have to see. Again, if it decides to bounce back up to the mid Bollinger Band on the daily, 30.68, then it could potentially break up above that, start heading to the top end of the range, and maybe run into a little resistance there, slightly below 32. But we'll see. We'll take it, day by day, like we always say. Here on the daily, you can see we just tried to retest this pivot point here of 28.41. 28.41, you can see 2 separate occasions, stock rejected. So yeah, that's why I'm saying we might have these little rejections now, bringing it back down to maybe this moving average, and then we're going to bounce and try to run back up to the high 20s and maybe try to retest that psychological 30 plus level again. But you could also see previous support level here sitting at about 17 3/4. So that's why I'm saying it looks like you're going to have to watch this 21, 22 level. And if it breaks, they might pull it back into the 18s and the 17s. But hey, like we always say, if you think in 3 years or 5 years this stock is hands down going to be worth more, then if you liked it up here at, 32, 27, then you should like it even more down at 17, 16, wherever it might go, right? As we say, in my opinion, if you have consistent income and you're able to just consistently add to a position, piece your way in, then usually, in my eyes, looking at something that you believe in over the long term, the pullbacks like that, I feel you should view as opportunities, not as negatives. But that's pretty much it. And I'll end it there. So once again, Stocks by the Numbers, I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up, algorithm, right? Helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.